Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, September 28th. It's 6:23 in the morning. Got a lot of red on the board. Let's dive into it. Don't forget to run your video player at 1.25x. I think you'll have a lot of luck with that speed. ES off 1%. NASDAQ off 1.6%. Small caps off 0.4%. Oil up 1%. Nat gas up 6% and through $6. Copper off 1%. Most importantly, we got the VIX over 21 again. Macro front. Yesterday, we had a junk 2-year auction. Bidders dried up, didn't go so well. 5-year went okay. Most importantly, today we've got a 7-year bond auction at 1 o'clock, and that's been, if you recall, back earlier in the summer and into the spring, we've had a couple of we'll call them episodes where the 7-year bond auction failed. It's not a popular maturity, and what can happen is you get a big spike in the 7-year rate, and then that bleeds into the 10-year, which we are tracking here on a daily basis. So watch that. We've got some international trade numbers this morning. We've got the Case-Shiller housing index this morning. We've got a bunch of Fed speakers today. I think we got Evans, Bullard, Bostic. I think those are the three today. And we've got Chairman Jerome Powell on Capitol Hill giving testimony. And I think, if I'm not mistaken, don't quote me on this, but Janet Yellen may also make an appearance at that testimony. Just on an interesting side note, you'll recall last week before the Fed announcement meeting, it was disclosed that Rosengren and Kaplan on the FOMC had been actively trading positions, while making decisions on the Fed Board of Governors. Yesterday, Rosengren turned in his resignation. Of course, it wasn't for trading. It was for health reasons, spend more time with the family, that kind of thing. So, okay, but now Kaplan turns in his resignation this morning. So the two big ES traders on the Fed Board of Governors have both quit, right, to spend more time with the family. And rightly so. No matter if it was, quote, technically not against the rules, it's a terrible look. And I think Powell wanted to clean that up before hitting testimony today. That would, of course, avoid a bunch of questions about it, give them time to tighten up the rules, etc. And when we're at a period of time where there is no faith in government whatsoever, having these episodes of just terrible ethics looks is not good. It needs to be cleaned up. So they're in the process of doing that. After the bell today, we've got Micron in the semiconductor space. So let's go through this rather quickly. Why? Because now we're testing downside levels, and we're going to get to that in a minute. But first up, most importantly, we're all bond traders now, right? We got to watch this stuff like a hawk. This morning, we're trading above 1.5%. We briefly went above that level yesterday. And there's one thing for rates to move up sharply, but if it gets beyond like a breaking point, It can cause things to break in the equity market. While we said cyclicals will do well in this regime, that's true. I mean, just look at the pre-market action. Small caps are down 0.4%, while technology, the Qs are down 1.6%, and SPY down 1%. So technology is leading to the downside. That's what we said. We said when we rising rate environment, that's going to be a big headwind for tech. But now it seems like not only the bubble names, the high valuation names, are getting clipped. They underperformed greatly yesterday. But when you see the top line averages go down, that means they're starting to dig in to the mega cap names, the FATMAAN names that we follow each and every day, because they're such an important weighting in the major averages. So that's what we're seeing this morning. So let's watch bond rates, and I would be watching like a hawk at 1 p.m. to see how this 7-year auction goes off. We've been talking about TLT, trading the opposite of rates. I think you've got a good trade set up on a break of this 145.25 area right here. We dropped below the 200 here at 146.50. If you're already short against 147 or short against the 200, I think you're in the catbird seat to hold on to that short. And, you know, the way it looks, we're going to be heading down on the open this morning. So you'll be in a good trade at a really good trade location that we pointed out yesterday. So watch TLT, especially if you're interested in making a trade on that instrument. We talked about the VIX. The VIX has been in focus. Evergrande spike. They slammed it down. Interesting yesterday that during the bounce, VIX, we opened the day below 18 and closed the day above 18. And now this morning, we're trading 21. So remember, our go, no-go line as far as volatility goes is north of 20 and rising. Bad environment for equities long. Below 20 and falling is more or less a green light. So pre-market, we're above 21. And if they buy this dip and you see volatility start to reverse and come down, that'll give you a lot more confidence to buy the dip. I'm going to go through the equity charts rather quickly just because when we, in the pre-market here with all this volatility, almost anything I record is going to be, has the potential to be, reversed in the pre-market. So I want to give you the levels, but not give, a ton of commentary to do this or do that, because we could break lower or they buy the dip in the pre-market. So, obviously we're at an inflection point here in the early going. But yesterday, equal weighted SPY, we had broken above the 50 EMA. So as far as that goes, it's bullish. I would be keying off of this 153 today. And even if you aren't trading it, use it as a market key. It'll give you a better read of what's going on under the surface than SPY will, just because this is an equal weighted index, not all tilted to the mega cap names. SPY 2 hour. We ramped off the Evergrande low at the back half of last week. We had some weakness yesterday. They pulled it up, but the bulls were not able to exceed this this Friday high of 445. Now we're down in the 440 range pre-market. We've got a gap below, and then a big gap, not a big gap, another gap down below that. So 2 gaps to fill. Now, as far as I'm concerned, the key is the 50 EMA. Here we have the 200 EMA on the 2-hour chart is the same thing as the 50 EMA on the daily chart. So as we drop down in the pre-market, assuming that it is not bought in the pre-market, we're going to have a big gap, an opening gap above. And so that, as long as we stay below the 50 EMA, you've got to be tactically defensive, right? We talk about that. Above the 8 and the 20, bullish. Below the 8 and the 20, but above the 50 is tactically bearish or cautionary. Below the 50 is a bearish setup. So we're set to open below the 50 EMA on SPY. What we got to see happen is this 432 hold. And, the final line in the sand is this spike low down at 429. I mean, if that goes, we go much lower. But if we come in to this 432 and hold it in the pre-market, there's the setup for the double bottom low and then a bounce. So keep that level in mind. I think the key levels here are 432, 436, and 440 at the 200. Here's a 30-minute chart. Basically the same thing as a blow up of that. Interesting to note that we've got a downtrend line off of the highs, and look at how price respected that downtrend line off of the highs and was not able to break above, and now we're set for a big gap open lower this morning. We talked about the higher rate environment being a headwind to tech. We're seeing that this morning on the Qs, and I've also drawn in a downtrend line on the 2-hour off of the highs, hitting these lower highs on the way down. And now notice yesterday that the Qs were stalled on the gap entry, could not penetrate that, and basically, died there in the afternoon trade. So again, we're going to open well below the 50. The levels down below to watch like a hawk are 364 and call it 361, 360.50. Those are key downside support levels. You break the prior low, you know what that means. It means lower, right? So this action here may have been just a reflexive kickback to fill this gap, which it did, and then, proceeding lower. So we're going to have to watch that. Here it is on the 30-minute chart, just the blow up. And you can see here that prior low came in right at around 361.50, right in that area. You see the low clearly down there. Watch that on the way down. Be prepared for a double bottom retest and a bounce or lower. And if we break below the prior low, that gives you an objective level to short. IWM. So we're down 0.4 in the pre-market. That's basically nothing. But here's the problem. If SPY and QQQ are getting destroyed, you can have all the outperformance you want in IWM. It's probably still going to be red. So you can't you can't hang your hat on, well, it's outperforming. That may be true, but it also may be going down, and probably is. So I still like IWM in the environment of rising rates, but within the context of today, you've got to look at downside support levels, and the same tech principles hold, that if you lose levels from above, then there's shorting opportunities for active traders. So when I looked pre-market, we were testing 225. We've got that all-important 224 level that we've been focusing on really for months. And then we've got the daily 50 EMA coming in at 221.86, call it 222. If you lose the 50, if you lose 222, then you're on the wrong side of the whole chart. Remember that zone between 222 and 224 is right in the meat of that bigger trading range. So you get on the wrong side of that, you get on the wrong side of the 50, then the idea that small caps are breaking out has to go on pause until the 50 is recovered, and then you can get back long again on a break back above 222 and definitely 224. So, but I do look for small caps to outperform today. And if they end up buying the dip, if you see them start buying the dip in SPY and QQQ, you definitely want to buy the dip in IWM, because that could be a scenario where it doesn't go down as much in percentage terms, but then when they buy the dip, I think they're going to be more aggressive on IWM, and you might get one of those situations, red to green, right? You get the initial pre-market plunge, and then in the regular session, they buy the dip in SPY and QQQ, and that helps lift IWM, where I think there's going to be more natural buyers in the risk-on cyclical sectors, banking sectors that we've been talking about. So enough about that. Here it is on the 30-minute chart, and you can see the levels going down, potential reaction points. I think the big one is down here, 222. You can see that there's a gap at 221, and then there's a gap at 218. So plenty of levels there to key off of. And if you get short at any point along the way and price proceeds lower, then of course you can move your stops down as price heads lower. Before we get into the FATMAAN names, we've had a number of new subscribers to the channel, I want to welcome you to the channel. I work hard every morning to get you guys good objective levels. And if you see that the work could be helpful to you when you're active in swing trading, I encourage you to subscribe, hit that alarm bell, jump over to the show notes, and there's a link there that'll take you to the website. You drop in your email address, and you get everything I do morning, noon, and night right in your email box. Very convenient, and I'd like to think it would be helpful in your trading. And of course, longtime listeners, I really appreciate you being here with me. And I think together we're going to be able to tackle this and do quite well. So I appreciate it. Pass that link along to others in your trading group and help us grow the channel. Facebook. We talked yesterday about this midpoint of the gap. Got stalled at 354. Now looking to the downside, we've got 350, and then we've got this prior low at 342. If we find ourselves back at 342 again, and it looks like they're buying the dip in the Qs and in SPY, that's a level that you almost have to buy. Why? Because it's proven that even on these big down moves that 342 has held. But if it breaks, you've got a very, very, very objective short with a stop just above. And then you can just stay in that short with duration. If there's going to be a lot of turbulence with mega cap tech, I mean, there's no more objective place than right here at 342 as a major pivot on the hourly chart to either be long against or short against that 342 level. Apple never got into the gap yesterday. You can see here it basically stalled the whole day at this 145.50 level. And again, today, focus on the downside levels. This prior low was 141.50. If it doesn't hold, going a lot lower. Let me look here on the daily chart, see if we can get a level. Yeah, see here, we've got this uptrend line coming in right here at 136. If you lose 141, you can get short down to 136, and I would be covering there, and that's going to be your objective long if you're below 141. It's going to be right down here at the this breakout level and where the uptrend line intersects. So you've got a double layer of support there. You've got the prior breakout and you've got trend line support. No more objective place to try along there than at 136. Tesla, I did not look where it was at today, but it's definitely been swimming upstream in the sense that it was one of the strongest tech names yesterday against a backdrop of rather sluggish trading. So for you longs out there, you've definitely got a pivot at 790. And then your first layer of support is going to be 770. What you don't want to see is a dropout of this channel. If things get really, crazy, nasty, whatever, however you want to describe it, you got to hold this channel. And as long as you hold this channel, of course, time frame is everything. If you're an active trader and you see, price open lower, then you've got 790 and 770 as pivot points to either hold or levels to reclaim on Tesla. Notice on the daily chart, PPO and RSI have been in their bullish regimes for quite a while. So obviously what you don't want to see is both of these roll over and lose their 50 level. And I can almost guarantee you if that happens, price is going to be out of the channel and then down below the 8 and the 20 and probably testing the 50 down here at 720. Microsoft, very weak yesterday, did not even get back up to the gap. This has been one of my favorites, at least, in my own mind. I kept thinking that, that breakout above 300 was going to be hugely consequential. Really has not played out that way. I mean, there's been good ranges to trade, but I thought this thing was gone over 30. Once we took out 300 and were challenging 305, that this thing was going to break out and just keep going. Did not happen. So today, again, you've got to focus on the prior low down here at 291 and the spike low down here at 289. Those have to hold. Here's the daily chart. You can see here that the 50 EMA is right here at 292. So a break below that, and then a break below this midpoint line of this channel, then there's the potential and actually good likelihood that Microsoft will find its way down to the bottom of the channel at like 275, 272.50. So key off of those levels. And I think if you lost the midpoint of this line and the lows from the other day, that you could actually be short Microsoft and look for 272.50-ish. Amazon, we had some really nice trades in the trading room yesterday. And we've got this one lady trader who goes by the nickname Pen Pal. And she is proving herself to be somewhat of an Amazon expert. And one of her bread and butter plays on Amazon is getting long against the low of the day. Of course, you never know it's the low of the day, right? You've got to put a little bit more into it than that. But if you're good at candle reading, if you're good at the charts to find out, okay, we took a plunge, but right into a support level that we had on the chart with a large volume over price bar there, that is an objective entry point where you can, take a shot at something against the low. And she did that yesterday. And there were several traders in the room that followed that trade. Got a nice bounce here. And that doesn't look like much, but when you go from 33.40 to 34.10, $70 run, that adds up into real money. So kudos to them on that trade. But bigger picture, series of lower highs. We had some lower lows here, put in a little bit of a higher low, but if this thing rolls over today, you'll have, of course, that big gap above, and then possibly be looking at a retest down here at 33.10, and simple. It's got to hold there, or it goes much lower. So again, like on all these charts, be keenly aware of where that prior low was at, and you may end up getting a good chance to buy that if the prior low holds, and it looks like they're buying the dip. Netflix dropped down, got support at the gap, and then a nice run up during the day. But again, notice we've got downtrend resistance there. So today, that it wasn't able to take out. So today, I'd be keying off of this gap and the prior lows down at 570. And notice here that in the volume profile, you've got a void, right? A void here where, because of this fast run up, not a lot of trades. So if you lose that prior low, it can move very quickly down into the mid 550 range, 555 in there. And so you could get a fast $15, $20 move on a break of the prior low. And I think that would be a very objective trade to make. Or again, on the flip side, price comes down, fills that gap, unfinished business is taken care of, the prior low holds at 570, and then you get a bounce. I just inadvertently deleted my Google chart. I apologize for that. I'm not going to try and retrieve it. The same comments hold. Watch the prior low. I wanted to give you a flavor on these commodities. We've got coffee. We remember a lot of us got this spike, then got out. Price has been kind of moving in this pennant for a couple of months now, and has just recently broken out of this pennant range with the PPO resetting at the zero line. Remember, when momentum comes out but holds the zero line and RSI is above 50, that's a bullish setup. So bottom line, I think coffee is set up to go higher. And if you look across the commodity space, oil, we talked about the breakout yesterday, going higher. Nat gas through 6 with a possible run to 12. I mean, if you look back on the charts, there were some prior highs at $12. So don't pull that out of the mix. And if you look at the commodity complex in general, very few are bearish. They're either in consolidation or they're breaking out. I think commodities are heading higher across the board, from sugar to coffee to cotton to base metals. You can look at that, the ETF, DBB. That's a nice base metals ETF you can play if you're interested. We talked about USO yesterday breaking out. I think energy names are going to start really moving, and that may be one green sector today. I'm going to be very interested to watch that to see if energy can put in a green while everything else is red. That's going to be pretty interesting. And don't forget about uranium and lithium. Two very, very strong segments of the commodity space This is Kamiko. They're a uranium miner. You can see that little parabolic run with a nice pullback to the 20. Now, I'm not long, but I like this setup. If I were to drop the fibs on that, just eyeballing it, it looks like a 50% halfback long right here from 20. So you've got price sitting here at 21. You've got the 50 at 20. So you've got $1 a risk with the prior high up here at 26. So you've got $5 of potential upside at a minimum with $1.50 of downside risk. So that's a nice opportunity. And you can thumb through the uranium and the lithium space. And I think those are going to be heading higher along with the rest of the commodity complex. So, okay, let's wrap it up there. Setting up to be a very, very active morning. Remember, as I always say, if you feel yourself getting discombobulated, nervous, panicky, take a step back. Go get a Diet Coke. Go get a cup of coffee. For however long it takes for you to restabilize, come back, and above all else, focus on the levels, not the money. If you get the levels right and you're on the right side of the trade, the money will be what it will be, and it will turn out fine. Don't try to trade if you feel you're not stable. It's a recipe for disaster. I've been there. I know what I'm talking about. Step away. You'll be saving yourself a lot of money if you do that. Let's watch rates. Let's watch Powell. Let's watch that 7-year bond auction at 1 o'clock. And let's watch those prior lows to see if they hold or not. I think it's going to be paramount. So let's wrap it up there. It's been Chris Buss with Trader's Profit Compass. Talk to you next time.